Hi, I'm Lisa Birnbach for Howdini.com. How do you pay down a student loan? Carolyn Bigda, reporter for Money Magazine. How much loan do most people graduate with?
Today, the average student who's graduating from a private four-year college is walking away with $19,500 in debt. At four-year public schools, it's about $15,500. It's a lot.
Is there a grace period that they have before they have to pay it all back? And how slowly or quickly do they have to start?
Yes, with federal loans and even with private loans, you typically have a 6-month grace period after your graduation. So you have that time to sort of get settled, hopefully find that job, and figure out how you're going to tackle this debt.
What's the first thing a young graduate should do to tackle it and to handle it and to not feel overwhelmed by it?
First, you've got to face facts. You have to see how much you actually owe. There's a website online that's offered through the Department of Education's website, where you can basically type in your personal information and it will shoot out all the different loans that you have with the federal government and which lenders actually hold them now.
And will it also provide you with a schedule for repayment?
No, you'll have to go to your lender for that information, but at least that way you'll know how much you owe, because over 4 years it's very easy to lose track of where your loans are and how much you've taken out. And so it's good to get a sense of exactly where you stand after graduation.
I'm wondering if the loans can be consolidated into one package so to make it easier to repay while you're learning how to be a grown-up.
Absolutely. It's a very popular thing to do, to consolidate all of your loans, because students are every year taking out a different loan. And so it's easier when you do consolidate them to have it all be sort of packaged into one big loan, which will have one monthly payment. And oftentimes it may depend. The consolidation loan, the interest rate for it is an average of all of your different loans. So you may actually end up with a lower interest rate depending on where your loans stand right now.
I'm wondering how this all affects people's choice of job.
It is daunting for a lot of graduates to face such high debt levels, to now at this point have to manage rent payments and other bills. It's a lot of juggling of their cash flow. And so what the federal government has set up are certain repayment options for students. You can elect to defer payment for a while if you need to. You can also elect other programs such as graduated repayment programs, so that at the beginning maybe you're only paying interest or a lower amount, and then over time you start paying more of the loan back. And then there are also income sensitive repayment programs. So you want to check with your lender and see what options are available for you.
And finally, is there anything a student can do to lower his or her interest rate when they are repaying?
Absolutely. Right off the bat, you can lower your interest rate by about 1/4 point to 1/2 point, in some cases as much as 2 percentage points, if you sign up for automatic payments. That's having your bank automatically send a payment to the lender each month. So that's right there an easy way to get a break. Also, if you make on-time payments over several years, it's usually between 2 to 4 years, your lender will typically give you another rate discount.
That is good to know. Thank you so much, Carolyn Bigda, Money Magazine, for Howdini.com. I'm Lisa Birnbach.